What do you do? Set up an S corporation or an LLC? Let's say you run your own business or thinking about starting one, buying rental property. You want to look professional. You also want lawsuit protection and additional tax benefits. Or maybe you just want to see a picture of my dog Whiskey. Either way, you came to the right place. What's the difference between an S corporation and an LLC? What's better? That's the question we're going to answer today. Hi, I'm the business guy with Asset Protection Planners, and I'm the CEO of one of the largest company formation firms on the planet. We have filed literally millions of documents to form and maintain corporations, LLC, and trusts around the world. And if you want to form a company, I have a discount code for you, but more on that later. And I need your help. If you could please click the like button below, because YouTube will promote this video more when you do. Thanks so much. You can text a link of this video to others, and you can also click the subscribe button so that when more videos come out like this, you'll get notified. So do you set up an S corporation or an LLC? What are the benefits and the downsides? How do you make the right decision for yourself? Now, this educational video is not to be considered legal or tax advice. We have licensed attorneys on staff who can give legal advice in many areas and talk to a CPA for tax matters. Okay, so an S corporation is not a type of corporation, but it's a tax category with the IRS. In fact, you can choose S corporation taxation for either a corporation or an LLC. So to simplify matters, this video will focus on whether or not you should convert your LLC to an S corporation. Now, whether you have a single member LLC where you are the only owner or a multi-member LLC with 2 or more owners, you can convert it so it is taxed as an S corporation, but it still remains an LLC. So how does an LLC taxed as an S corporation pay its owners? It pays them in 2 ways. Number 1, a reasonable salary, as the IRS calls it. Number 2, for the rest of the money, it can pay a distribution to the members of the LLC because owners of LLCs are called members. Now, the IRS taxes a salary and a distribution differently. But before we get into that, let's talk about whether or not you should even choose S corporation status for your LLC. Here are the restrictions for making an S election. First, S corporations cannot have more than 100 shareholders or LLC members. Second, all owners must be U.S. citizens or legal residents, so even one foreign owner spoils the whole barrel of apples. Third, shareholders must be natural persons or certain trusts, such as living trusts, so another corporation or LLC cannot be the owner of an S corporation. And fourth, S Corps can only issue 1 class of stock, like Google that has 2 classes of stock, so the original owners have more voting power. An S corporation cannot do so. And fifth, an S corporation cannot be publicly traded, so you simply convert it to a C corporation before doing an IPO. So if these requirements work for you, keep watching. So an LLC taxed as an S corporation can also treat owners as employees. It can pay them salaries as employees, and it can pay them distributions as owners. Okay, let's zoom out a little bit to get the proper perspective. If you have a single member LLC and did not make the S corporation taxation election for your LLC, then your LLC will be treated as a sole proprietorship / disregarded entity for tax purposes. That means that all of the business income that it earns, whether you pay it to yourself or leave it in the company, will be subject to federal tax, state tax if the state where you live has state income tax, Social Security, and Medicare. If your LLC owns rental property, you generally don't have to worry about Social Security or Medicare on your rental income. A multi-member LLC is treated as a partnership by default, and the same tax rules apply as above, with the members subject to the 4 level of taxation as mentioned above. However, if you choose the S election, you have an additional option. As we said, after you pay a reasonable salary if you do work for your LLC, you can also pay yourself a distribution. A distribution to S Corporation LLC members is not subject to Social Security tax, currently at 12.4%, or Medicare tax, currently at 2.9%, for a total of 15.3%. So the distribution is only subject to state and federal income tax. You don't have to pay the 15.3% tax on distributions from an entity taxed as an S corporation. And that is whether you are a shareholder of a corporation or member of an LLC that has made such an election. So if you pay yourself an extra $10,000 as a distribution to the owners instead of as a salary, that is, you write a check from the LLC's bank account payable to yourself and write the word distribution in the memo section, you save yourself $1,530. You pay yourself $100,000 for the year as a distribution instead of a salary, and you can put up to an extra $15,300 into your pocket. So the major benefit of S Corp taxation is that it saves you the 15.3% self-employment tax on distributions. So how do you file for S Corporation status for your LLC? To make the S Corporation election, your CPA will file the 8832 form and select Corporation Taxation, and then the 2553 form to make the S Corporation election. Okay, now let's take a look at the possible downsides. Now, I don't really see them as downsides. I just see them as things you should know, and there are 3 of them. First, the IRS says your S Corporation must pay you a reasonable salary. That is, if you're going to hire another person to do your job, how much would you pay that person? So after you pay yourself a salary, let's say on the 15th and 30th of the month, for example, the rest of the money your company makes for that period, or at least a portion of it, can be paid to you as a distribution, and you save yourself the 15.3% tax on that portion. Somebody says, hey, business guy, I know, I'll just pay all of the money as a distribution and save that 15.3% on all the money I pay myself. Well, if you don't pay yourself a salary, or if the salary is too small, the IRS won't be too happy because they would expect a portion of your pay to go towards Social Security and Medicare. So if you pay yourself a salary that's too small, the IRS may take notice and demand back taxes and penalties. That is, pigs get fat, but hogs get slaughtered. So take advantage of the great tax benefits, but don't go overboard. Number 2, while saving 15.3%, you'll also need to take an additional step of setting up payroll and managing tax withholdings. Now, you want to run your business, not get caught up in studying payroll tax law. So there are great companies who do this for cheap for all of the employees of our company, such as ADP and Paychex. Now for this item, it's a simple decision. Determine how much you will probably pay yourself as a distribution, multiply that by 15.3%. There's your tax savings. Next, call a company such as ADP and see how much they would charge you to do your payroll. If the amount you save in taxes plus the time you saved yourself in delegating it are more than you would pay ADP, well, maybe you need to make an S election. If your company does well and you think you'll have excess money left over after you pay your salary, an S Corporation election may be a good idea. That's because an S Corp will typically best serve you the more money you pay yourself as a distribution. But if you're going to plow the excess back into the company and take that as a tax write-off, then maintaining the LLC's default taxation status and not choosing the S election might be the best choice. Third, you will likely not want to choose S election if your LLC owns rental properties or stock market investments and has significant passive income. Transfer of these assets into or out of an S corporation to its shareholders may trigger an immediate tax on the gain. Conversely, distribution of real estate or stock from a regular corporation to its members does not trigger gain on the distribution. The tax is deferred until the individual members sell the real estate or stock. Another reason not to choose the S election for an LLC that owns real estate is that under IRC 469, S corporation owners cannot deduct real estate losses on their other income sources, so you could lose that incredible real estate tax deduction. A final reason not to take the S election on your LLC that owns real estate is this. When you die, your heirs receive your real estate tax-free with a step up in the tax basis price. That means when they sell the property, they only pay taxes on the gain based on the value on the day they inherited it, not based on the original purchase price. Not so when an S corporation owns the real estate. However, LLCs treated as sole proprietorships get to make the Section 754 election to step up their underlying assets to the fair market value on the day of inheritance. So every tax advisor I've ever spoken to has told me not to choose the S election when the LLC owns passive investments such as a stock market portfolio or rental property. But for those LLCs that you use to operate an active business, the S corporation election is something to consider. We hope you found this educational video valuable with information you can use to help make the proper decision for yourself regarding LLCs and S corporation taxation. So get tax advice from your CPA. If you need legal advice, you can call and see if our attorneys can help. Remember when you call us to use the coupon code BG25 for $25 off a corporation or LLC. Please enter your comments below, click like, subscribe, and text a link of this video to others. Thanks for watching. This is The Business Guy.